Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1049A, and today's date is August 15th, 2016, and the title of the episode is The Central Bankers Are Preparing a Wealth Tax, and Greece is the Guinea Pig. Now, before I get started, I just want to make an announcement. Tomorrow, Tuesday, I'll be uploading an interview with Bix where he breaks it down how this collapse is going to happen, what's going to happen with your funds in your 401k, in your retirement, and what to expect. So if you have some time, I would sit down and take a listen to it. If you are on the X22 Report email alert system, I'll send you an email as soon as it's uploaded. If not, you can go right over to the X22 Report Spotlight YouTube channel, and the video will be there once it is uploaded, and you can view it there. Or you can come over to the x22report.com site. You can view it there, or newsentinel.com. The video will also be on that site. Let's get into the economic collapse financial news. Now, at this point, we all realize that the debt around the world cannot be sustained. We also understand the economy is deteriorating, and the governments, they don't have the ability to bring in the revenue to pay down the debt. And as the debt continually grows, and it's growing very, very quickly, it's getting more and more difficult, because what's happening is, as the debt grows, governments cannot operate. They need to borrow more money. They need more austerity. And the situation gets worse and worse as time goes on. And we realize that the central bankers, their ultimate plan is to have the people bail them out, pay down the debt. Not all of it, some of it. And they've tried different plans. But something very interesting is happening in Greece. And before I mention that, we have to remember Cyprus. Remember when Cyprus was in trouble and the banks were defaulting, and they had to go into the banks to prop up the system, and they've confiscated the people's currency. They had capital controls, everything went on a bank holiday, and the capital controls lasted for more than a year. Actually, there's still capital controls in Cyprus. And people weren't able to access their money, transfer their money, or anything like that. And everyone knew it was a test case. This was a test case for bail-ins, because we knew there was a bail-in document that was created, I believe it was 2012, between the FDIC, the Fed, and the Bank of England. And they created it. And then all of a sudden we had something happen in Cyprus. And then all of a sudden Canada wanted it, Europe wanted it, and it spread because they realized that governments aren't going to bail them out. Now, Christine Lagarde has come out and said, to get rid of this debt, we need to go to the people, and they're going to have to sacrifice with a wealth tax. This is one of their plans. Now, when we look at Greece, it looks like they might be starting this, or testing it out to see how the people react. The Greek Finance Ministry, well, they confirmed some details on a long-planned registration of all kinds of private wealth that will go into effect February of 2017. More than 8,500,000 taxpayers registered in Greece will be called on to declare all movable and immovable assets. Their total wealth and even cash they possess under the mattress, hidden in floorboards, in safes, even if it's below €100, down to the €1, they need to declare it. And they'll have to register all of it. And all this information is going to be uploaded to the tax authority's website. So you can have real estate, declared income, income from rents, vehicles, cash, gold, silver, jewelry, antiques, paintings, you name it, they want to know about it. So then you have to start to think, why do they need all of this? Well, it looks like it's going to be what they call a one-time wealth tax. So what they're looking to do is find as much wealth as they possibly can to pay down the entire debt. Now, I'm not saying they're going to pay it off completely, but they need enough to start paying it off, and they're going to the people. So the tax is going to be on the middle, upper class, most likely. It will then trickle down to the poor. And the tax that they're going to use, the rate they're going to use, it's going to be a blended rate of about 28.7%. And it's starting to look like Greece is going to be the guinea pig for this wealth tax system. And here we are. Because governments, they have spent and spent and spent. The debts of these countries are very, very high. The world debt is extremely high. And the central banks, they're not just going to get rid of them. They want the people to sacrifice. They want the people to come up with the funds to pay for their debt problem. Just like they want the people to bail out the banks. It always comes back to the people. And this is why many people are out there, and I'm doing this right now, where you only keep enough in the banks to pay your bills. The rest is hidden someplace else. Now, I know they want you to count up, the people in Greece, they want them to count up the currency under their mattress, their gold and silver, but you know what's going to happen, just like during the Depression, where people were asked to turn in their gold. Many people did not. Many people hid their gold. The same thing's going to happen in Greece. Many people are going to say, this is all I have in the bank, that's all I have. You can tax that. And this is why the Greek people, in the beginning of the entire election and everything going forward with Tsipras, this is why they ran to the banks and took their currency out of the bank, because they realized that something was about to happen, because the country cannot continue on the way it is. It's completely impossible. And we're starting to see that it really can't. I mean, they are too far into a collapse scenario that there's really no way of getting out of this situation. Japan right now, their economy has slowed in April to June, and they have weak exports. Their recovery is not working whatsoever, which we know. Actually, the recovery of all these countries is not working. And what we're seeing right now is that Greece, Japan, Germany, France, Italy, UK, Canada, the US, Australia, all of these countries, all these economies of the private Western Central Bank, they are going to collapse. Here in the United States, what do we see? Well, the U.S. economy here, that's driven by 70% of spending, it is not doing well. Because when you look at this, you have to ask yourself, the government continually is out there telling us how great retail sales are. So why then are retail stocks lagging by so much? Why are there many companies warning about high consumer uncertainty? Why is the consumer spending on discretionary items like dining out imploding right now? The consumer is not strong. Consumer spending is weak and getting weaker. Spending using credit or loans, that's not real spending. That is debt. You use that because you don't have the funds. So when we look at this, people today, because they're losing their jobs, they don't have the jobs, they can't find the jobs, so they don't have the funds. If they don't have the funds, they don't have the discretionary funds to spend out in retail, and that is what's happening right now. And since retail is declining, manufacturers don't have to produce. And we're seeing this here in the U.S. We had a couple of dead cat bounces, but it seems that they are over. The Empire Fed, well, they tumble back into contraction to a 6-month low. Now, they thought that the Empire Fed was going to pop up to +2, but it dropped to -4.21. So we're back in the negative area once again. The Baltic Dry Index is holding at 681 right now. And when we look at the entire situation of the economy and what's going on around the world, the entire system is collapsing. There's nowhere for this system to go. Debt is extremely, extremely high. It cannot be paid down. Governments continually spend. It's completely out of control. People are losing jobs left and right. Corporations, they're not making profits. They can pretend they are by selling pieces of their company, closing stores, closing factories, laying off people, saying they reduced expenses. But that doesn't mean the company's doing better. That means they cut out expenses to make their books look better, and then the next go-around, sales drop again. What do? And we've seen this with many companies. Remember the store Circuit City? Remember Crazy Eddie? I'm going way back now. All these different places, they closed stores, they closed some more stores, and they went completely out of business. We've seen it happen time and time again. It might look good today, but tomorrow, it's not going to look good. The entire system is contracting, and the people aren't spending. There's no jobs, and the situation continually gets worse. And we can see right now that other countries, they're stepping up. Russia really has no debt. Putin took control of the central bank, and Russia right now, they're expected to outpace the European Union in the export of wheat. According to the U.S. Department of Agriculture, they're projecting that Russia will become the world's top exporter for the first time. Russia has also found a major oil discovery, a new field in the Irkutsk region. And they're saying the preliminary reserves are estimated at 25 million tons of oil equivalent. So we see Russia and China, they are continually making deals with other countries. Their economies are moving along, even though the corporate media continually tells us how bad everything is. But you have to remember what they're doing. They are continually purchasing a huge amount of gold. They're continually out there making economic deals with many of the countries, while the U.S., on the other hand, is out there making war. We look at Ireland right now. They might be the first country in the world to see a bail-in type of scenario. And the reason why I'm saying this is that the FBD, one of Ireland's largest insurance companies, they've been moving cash out of the Irish bank deposits and into bonds. The reason why they're doing this, because of the warnings of a new property crash in the housing market in Ireland. And they're worried that they're going to go into the banks and do a bail-in. So they're removing their funds from that area. And they moved about 150 million euros out of the Irish banking system into corporate and sovereign bonds. So we can see already that corporations, individuals, they're preparing for what is coming. They understand. Now here in the United States, the FDIC is saying that the U.S. biggest banks, they do not have enough capital reserves to weather a financial crisis. They're completely inadequate. And if we had the same crisis that we had in 2008, these banks would go completely under. And right now, what we're seeing is that these banks will go under. They do not have enough. And these banks will never have enough. And when we look at this, and we look at the entire mess of the financial system, these banks, they had to follow a new regulation, the Volcker Rule, that forced banks to sell certain risky assets that might be toxic again. And the rule was actually born in 2008, after the financial crisis. And it was supposed to go into effect by 2014. But what happened was the bank said, oh, they're not really ready. Can we delay this another year? And then another year went by, another year went by. And now they have a 5-year extension through 2022. It's 8 years they had to sell off their high-risk assets. The reason why they haven't been doing it is because they cannot find anyone to buy them. So they're holding them. And this is a major problem. So when the financial crisis hits, the banks will be insolvent and they will proceed with bail-ins to bail the banks out. That means they will take control of your funds inside of the bank, and they'll give you worthless bank stock for the replacement of your currency. And they'll tell you, listen, you can't touch these accounts for many days. And we can see what's happening in Greece. We can see what's happening in Ireland. We can see what's happening around the world, what they're preparing for. This system is getting ready to implode. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.